Welcome to ZenVest Edge. In this video, I want to do a full deep dive into the most powerful tab on our scanner, the Quant Screener. I'm going to show you exactly how it scores every stock, what signals it uses, and most importantly, how you actually use this to plan and execute a trade from start to finish. Let's go. What you're looking at is a hedge fund-style quantitative model, inspired by the approach used by many hedge funds, some of the most successful hedge funds. Every day, our scanner runs across 93 symbols, pulling from the S&P 500, NASDAQ 100, and the Dow 30. It scores each stock on multiple quantitative signals, normalizes those scores from 0 to 100, combines them with weights, and surfaces the top 30 stocks for the day. Right now you can see, Universe, 93 stocks scanned, scored, 93, all got enough history to score. Top 30, the ranked leaderboard, 0 strong buy today, the bar is set high. 8 stocks with a buy signal. Average composite score across the top 30 is 44.8 momentum, 28%. Sharp, 24%. Options flow, 20%. Volume, 16%. Alpha versus SPX, 12%. One of the most important questions is, when does this run? The scanner fires 5 times every trading day, all in Eastern Time. Aero 9:10. Pre-market check, using overnight data, Aero 9.35. First scan after market open, Aero 9:50. Second scan as price discovery settles 10:05. Third scan, trend confirmation window, 10:30. Final morning scan before midday, slowdown. Why these times specifically? Aero 9:10 is intentional. It gives you a ranked list before the market opens at 09:30. That 20-minute window is gold for pre-market planning. From 09:35 onward, live market data starts flowing in, real prices, real volume, and the scores update to reflect what's actually happening at the open. The 10:30 scan is the final morning read. By this point, you have a full picture of the first hour of trading. Now, let's get into the signals. There are 4 signals that actually contribute to the composite score. Momentum at 35%, the biggest weight, sharp at 30%, volume at 20%, alpha versus SPX at 15%. Let me explain each one. Signal 1, momentum, 35% of the score. This is not just a simple is the stock up this month calculation. We use 3 sub-signals combined. First, the 20-day rate of change. How much has the stock moved in the last 20 trading days? That captures the recent pulse of the move. Second, the 60-day rate of change, the longer-term trend over the last 60 days. Is this a sustained move or just a spike? Third, a linear regression quality score. We run an OLS regression over the last 60 days of price. The slope tells us the direction of trend and we multiply it by R squared, the quality of that trend. Here's the key part. The regression slope only contributes to the score if the t-statistic is above 1.5, meaning the trend has to be statistically significant. No noise. The final blend, 40% recent ROC plus 30% long ROC plus 30% trend quality. MU's momentum is 104% over 20 days. That's a strong signal. Compare that to GFS at number 4. 41% over 20 days. That's a watch. Still positive, but not as powerful. Signal 2, sharp and risk-adjusted return, 30% of score. This is where we separate the real movers from the high-risk gamblers. We calculate 3 things and combine them. Annualized Sharpe ratio, average daily return divided by the standard deviation, then scaled up to 1 year. This tells you how much return are you getting per unit of risk. Sortino ratio, same idea, but it only penalizes downside volatility. A stock that moves up fast but dips occasionally scores better than one that just gyrates both ways. Kalmar adjustment. If the stock has drawn down more than 20% over the scan window, the score is cut by 40%. If it's drawn down 10 to 20%, it's cut by 20%. This protects us from chasing damaged stocks. MU has a Sharpe of 7.45, exceptional. That means strong returns with low volatility, the ideal combination. INTC is at 517. Solid but not exceptional, hence a watch. Signal 3, volume anomaly, 20% of score. Volume is the fingerprint of institutional activity. When the big money is moving in or out, volume tells you before price does. We use two subsignals. Relative volume, today's volume divided by the 20-day average. 1.0 means average, 2.0 means double the normal. We log normalize this to prevent one extreme day from dominating the score. OBV slope, on-balance volume. This adds up volume on up days and subtracts it on down days over 20 bars. A rising OBV slope means accumulation. Institutions are buying in the background. A falling OBV slope means distribution. They are quietly selling. Interesting, MU is ranked number 1 overall, but volume is weak. 0.33x means volume is below average. This tells us the move has been on light volume, worth monitoring. Okta, on the other hand, has strong volume at 1.79x, nearly double the average. Institutional hands are moving. Signal 4, Alpha versus S&P 500, 15% of score. Alpha answers one question. Is this stock actually beating the market, or is it just riding the tide? We use Jensen's Alpha, an OLS regression of the stock's daily returns against the S&P 500. The intercept of that regression, annualized, is the alpha. A positive number means the stock is outperforming the benchmark by that percentage per year after accounting for its market exposure. We also apply a market-neutral bonus, beta below 0.5, alpha multiplied by 1.2, beta 0.5 to 0.8, alpha multiplied by 1.05, beta above 1.5. Alpha is penalized by 15%. This is directly from the medallion fund philosophy. Stocks that outperform independently of the market are where the real alpha hides. MU is generating 250% annualized alpha versus the S&P. That is extraordinary. It's not just moving with the market, it's running laps around it. There's a fifth signal that feeds into the composite, options flow. This carries 20% of the final score. Options flow reads the message from the derivatives market. We look at call versus put open interest ratios, implied volatility skew between calls and puts. High call OI versus puts. With calls trading at a premium, that's bullish institutional positioning. High put OI with elevated put IV, that's hedging or outright bearish positioning. OKTA at number 3 overall, but options flow is weak at 40-60, meaning the options market isn't confirming the quant momentum. That's a caution flag even for a high-scoring stock. Below the scored signals, you'll see a section marked Info Only, not scored. These 3 signals don't affect the composite score. They are there to give you context, not to rank the stock. Let me walk through each one. Beta stability. Beta measures how much the stock moves relative to the S&P 500. Beta of 1.0 means it moves with the market. Beta above 1.5 means it amplifies market moves. High risk, high reward. Beta below 0.5 means it's market independent. This is where real alpha hides. MU has a beta of 2.95, nearly 3 times the market volatility. Strong momentum, but it will also fall hard if the market pulls back. Okta at 0.96 is essentially market neutral. The low beta label is the scanner flagging that this stock's edge is independent of what the market does. We display this so you can make position sizing decisions. High beta stocks need smaller size. Earnings surprise. This pulls the last 4 earnings quarters and calculates the average EPS beat percentage. There's a well-documented effect in academic finance called post-earnings announcement drift. Stocks that consistently beat estimates keep outperforming for weeks after the report. Let's continue in part 2 of this video.